ever buy a coin and the moment you enter, it drops? Did that happen to you ever? Not like a slow pullback. I mean instantly. Big drop, like the chart was waiting for you to enter and it said, perfect, that's the top. Now let's go down. If that's ever happened to you, you're not alone. Welcome to the club. I'll break down exactly what is happening in this video because you are not alone. You are playing the game that everyone else is playing, but you probably don't realize it. If you're new here, I'm Sarah, also known as Saratoshi. I've been in the crypto space for more than 5 years now, and on this channel I break down market trends, my personal strategies, and how I navigate crypto step by step. And by the end of this video, I'll also walk you through what is Bitcoin's next move and what I'm personally watching for right now. Now, what I want to talk about as number one is the highlights effect. Crypto content nowadays is very similar to Instagram, TikTok, whatever you see on social media. You're mostly seeing the best moments, the highlights, not the full journey. You'll see, I just made 20k in 2 hours, that's another 10x gem, I call this early, I made that, I made this, and so on. But what you don't see is how many trades didn't actually work, how much risk was taken, how long it actually took to get there. Because, let's be honest, nobody wakes up in the morning and posts, oh, just had 5 bad trades, I just lost 1 million, my confidence is slightly damaged, but let's move on. Nobody posts that, right? It's myself, I've not seen that. And this actually matters more than people realize. Why? Because you're only exposed to wins. You start thinking losses mean that you're doing something wrong. Losses mean that you're not smart enough for crypto or trading. When in reality, losses are part of the process, even for experienced traders. That's what I want you to understand. You're not stupid, you're not the only loser, everyone loses, but what you see out there is only the highlights. Now, number two, I want you to understand the incentives. This is very, very important. A lot of crypto content is connecting to some kind of business models. For example, creators may use exchange links and earn percentage from trading activity, or they may highlight certain projects that they're already involved in. Now, this doesn't automatically mean that a project is bad or this person is bad. No, this doesn't make them bad. But it does mean that their incentive and your incentives might not always be aligned perfectly. And this matters because if you don't understand that, you might end up acting on information without actually questioning it and fully understanding it. One of the biggest mindset shifts that you can make here is don't just ask, is this a good trade or a good project? Ask, why is this being shared with me right now? That one question alone filters a lot of noise. Now I'm coming to point number 3, which is not very exciting, but again, another important point. The truth most people skip. Consistency in crypto doesn't come from big wins or overtrading. It comes from not taking unnecessary losses, managing your risk, and staying in the game long enough. Because realistically, or most people don't lose because the market is bad or the market is impossible. They lose because of how they simply approach it. Things like entering after a big move to the upside, using too much leverage, trading based on emotion. Like for example, opening randomly a position with 20x leverage at 2 a.m. at night. After watching some confident guy on TikTok or on YouTube say this is guaranteed, 100x is guaranteed. At that point, it is not even trading anymore. At this point, it is just advanced gambling with better graphics. Now, point number 4, reactive versus structured. And let's simplify that difference. A reactive approach looks like this. You see a coin already up 30-40%. You feel like you're missing out, you enter quickly. Then the market pulls back and you're stuck managing a bad entry. You don't know what to do. A structured approach is very different. You're either entering before the move based on a plan, or you're patient enough to wait for a better opportunity, or even more importantly, you're comfortable doing nothing, just sitting there and waiting. And that's something people underestimate, because in crypto, doing nothing feels wrong. It feels difficult and it feels very wrong. But forcing trades is usually what causes losses. As I said earlier, a random trading at 2 a.m., you say, I think it's going up, and then 5 minutes later, you're evaluating your life choices pretty much. On the other side, a structured entry is something that you've planned, something that you've defined your risk for, and you've set your stop losses. No guesswork, no emotional decisions, just planning and execution, which is extremely, extremely important. And let me tell you something that I've learned myself. That's what I learned for the past 5 years here. The more boring your process feels, the more consistent your results usually are. Excitement in trading and investing often comes right before a mistake. Just write this somewhere or remember it. excitement in trading and investing often comes right before a mistake. Whenever you catch yourself being excited, this is time for you to get a little bit cautious. And let me tell you something clearly. If you've ever bought too late, sold too early, or felt like you're always one step behind, well, it's not a lack of ability or stupidity. It's usually lack of structure. Because once you shift from reacting to preparing for the moves, everything changes. You stop chasing, you start positioning, and this is where everything changes. This is where the actual difference is being made. And if this video helped you and gave you a different perspective, make sure that you like and you drop a comment below, and make sure that you also subscribe, because I will keep making similar content and helping you navigate the crypto space. Now, in terms of Bitcoin's next move, as you can see, we are coming to the upper side of this channel, very similar structure that we had earlier. As you can see, we were following this same channel for months in a row before we saw the next big crash, and I personally see this being repeated over here as well. Now we are coming to the top of this channel, and this is where the real battle is going to begin. It will be very important to see if we can break above this channel and actually sustain the upwards momentum, hold there, and continue moving to the upside. But my personal view is that we are going to see a pullback to the downside of this channel, and then expect the next big move to the downside, to the 50s, coming later this year. This is how I see things panning out. But again, let me know what you think in the comments below. For now, I'm just watching what is going to happen at the top of this channel, because this is where, as I said, the real battle is starting. As you can see, the first red candle, the daily red candle, is forming up over here. But let's see how this week closes will be really essential. The closure of this week will decide the next upcoming moves. So we keep monitoring that, we keep watching that. If you want to join Discord, you'll find link in the comments and the description of this video, and I'll be very happy to welcome you. So we just added 2 new picks this week, AI project and a meme coin. So hopefully we'll be able to make some returns by the end of next week. Thank you so much for watching. I'll see you in the next video.